Welcome in, you trader nerds. The market is doing absolutely, positively freaking nothing. It is up 0.2% and it is a dead day. And I've been noticing it's just been boring of late, y'all. I mean, look, we're so bored that we're drawing big green monsters on bonds. Isn't that crazy? So Trey and Ed were talking bonds yesterday, and I said, you need to draw a big green monster on it. So let's look at the big green monster on bonds. It is fairly priced, right? So it very well could go to the top of this range before it makes a little bit of resistance. And it looks like this is a really nice little place where this would want to go. Look, it has not even tested. We've got our 50% line at the 133.06. And there is a little gap of volume there. Looks like that might be a natural magnet. We've got a natural magnet here and a natural magnet here. So this kind of looks like, even though it could go up, I think it definitely could go down a little bit first before it goes back up. But this is fairly priced. So let's look at our ES. See how our little thing is here. So we are overbought. We are at the point of control. We anticipate that we will go here at some point and then ultimately come back in here to be fairly priced. But we're overbought in there. Let's go look at our little market internals today. Let's see, volume is kind of blah, blah, blah for the 2-minute bars. AD is creeping up. VIX is 18 today. And I don't know, we're at the overnight high. So it's really nothing. We will not be trading tomorrow. It's Good Friday. I don't know what the market hours are, but I'm just going to let my counts go because it's just been a nothing burger. So let's see how our accounts are doing today. Let's go find our accounts, session warning. All right, here we go. So we are at 36,691. 36,691. Oh yeah, 36,691. Fire up the band, Roger.
Well, we're moving on now. Moving on up to the side. To a deluxe apartment in the sky.
Yes, hallelujah. Let me hide everything here. All right, so we are at, all right, got this working here. So we are at -7 and 20. Oh, that's eating our theta up. -7 and 20. -7 and 20. I can't keep enough gas in the tank. Look at that. So we're at 18 on the VIX, and our buying pair is 11,615. Boy, this pollen. 11,615. All right. Wow, this is unusual. We're above here and below here. So we got to put a trade on. So let's go and go to trade, go to the ES, macros. And where do we want to go? Which one have we been doing this? The AM or the quarterly? I can't remember. Let's put it in here. Yeah, I got orders in here. All right, so let's put in an order. Since our theta is so low, why don't we do, y'all want to do a 111 or 112? I think I'm going to do a 111. I've been comfortable with those lately. So let's go right here to the 3,600. And let's go to the mid price. And let's do, what do you say, 2 of these? 2 of those. And get her filled, baby, get her filled. I said, get her filled, baby, get her filled. Replace. We'll work it down. That will fill. Bingo, baby. So we're in on a 111. So now we got to do long put vertical. Hit it wide. Pity. It's going to get hung. And then I'm going to fuss and gripe and grumble. 80, 30. $10. Go one more down. So 38.75, 39.25. That's 50 wide. So see if we can get filled with 2 of the, yes. Ed, do you have something?
No, I just want to make sure you did too.
Okay, so we'll get that up to 10. And then we'll do quantity of 2. So we've got a 111 and a 11. Ta-da, we're in. Yay. Hallelujah. All right, so we got that in. So let's go over and look at our next account. Let's first of all, since we're closing the week out today, let's see how we're doing in this account. We're coming back. We're down negative 2.63%. The market's up, whatever. All right, so we're back in the game. Everything looks good. Close this one. Let's go to our other one. And we'll go to the IRA first. And we are at 83,726. 83,726. Oh, we're having a nice day over here. 83,726. Fire up the band, Roger.
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
All right. And our Greeks and ratios over here are 51 minus 10. Or 51 minus 10 is 41. Having to do a little math here. 4168. 4168. Looks nice. 41. Uh-oh. That's where all the profit went, though. See, it sucked our theta out. Sucked it out, y'all. And that's one thing Ryan was talking about. In these markets like this, when the market's just dead, I mean, it just eats our theta up, and you just got to keep throwing money into it. So our buying power is 25,975. Yes.
I was just saying that's a high class problem.
High class problem. 25,975. So I'm a
That'll feed the
little,
beast.
yeah, I'm a little red here and a little blue here. So old Bob is going to go over here and I'm going to do something similar to what I did in the other account. I think I'm going to do a 111. And we're going to go 70 days right here, 71 days. And let's sell something. So let's do 2 contracts at, I don't know, 3580, 3600, right? I think that'll make me nice and happy. 3600s, and let's go for 2250. Do 2 of these. 3600. $3,600 going once, going twice. Come on, fill me, baby. 3,600 for 22.25. 3,600, 22.25. I'll never remember that. 3,600, 22.25. 3,600. 22.25. Beautiful. All right, so we'll call this. We did 2 of those. I think I did 2 of those. Give me S2. Naked put 38. Puts naked 71. Oh crap. Dag nabbit. I thought I put a trade on yesterday. I guess I didn't. Is that right? All right, so naked in 71 days for 623. Beautiful. Look at that. Isn't that great? All right, so let's go put our put debit spread in. So we did, make sure I did do 2 contracts. Yeah, I did 2 contracts. So now let's trade. And we did the 39.20, 38.70. I think 39.20. 38.70. 39.20. 38.70. 2 of those. And remember, these have got to be in quarter increments. Okay, so there. 39, 20, 38, 70, 10, 2 of those, and swam. Swam jamma damma. They don't even care that I'm in session. I mean, it's like it's like I'm not even here, you know, they just, I guess I need to enjoy them while they're young, though. 39.20. 38.70.
Are you talking about your kids?
Yeah, I'm talking about my kids.
Well, that's so nice. Here we are on day 4 of spring break, and look at the turn since Monday.
Well, we went to see the Super Mario movie yesterday.
Y'all came home real bonded after that?
We did. We were singing Kumbaya on the way home.
I love it.
It was a great movie too. And you know what I like about it? Like a lot of the cartoons have like butt humor and fart humor and all that kind of stuff in it. And I'm like, yeah, you know, a little bit of that's okay, but this had none of that. And it was still a funny little movie. It was good. And they didn't have any political agendas or anything. I hate when they do cartoons and try to do, you know, move political agendas. And it was good too, because it wasn't like, you remember when we would watch Bugs Bunny and they'd shoot guns at each other and talk about killing each other and all that kind of stuff. And they even mentioned killing each other in this movie. And that was like, hey, it was good. It was like an old.
Yeah, what about the
those movies.
Roadrunner? You want to talk about violence? How about the Roadrunner?
I was never a fan of Roadrunner.
Oh,
When that would come up, that was just as bad as Pepe Le Pew. If Pepe Le Pew or Roadrunner went up, I'd go play with my toys and I'd wait till
I like
Sylvester.
Roadrunner. The
Did
bad
you?
guy always got it in Roadrunner.
He did. He surely did.
Hey, Bobby, when you through entering this, could you just go show us your positions in this account? And I want to see, like, you know, we talked a day or two ago about, you know, some cheapies that you might want to take off. I'm curious to look at your metrics after you just did what you did. I'm guessing your deltas went up a little bit with this move.
Yeah, so our deltas were 55 minus 10, so we're what, 45 now?
Yeah, like
45,
46-ish.
71.
Yeah, 46,
What were we?
71. I don't know.
45, yeah, 41,
So
68.
you're 46 and 71 now.
Mhm. Now, interestingly enough, Ed, you do bring up something kind of cool. Let me put my groups on, because let me put them in my groups. So here, and y'all, with Ryan telling me to do this by orders, look, this is so easy. Look at that. Move to group. You ain't even got to click them. It's like put debit spreads, and there's my nakeds. Move to nakeds. All right, so let's see how our nakeds are doing, y'all. So here's the thing. Tomorrow is the day that I'm supposed to roll them out. So do I roll them now, or do I roll them on Monday?
Since you're asking,
Yeah, Ed.
you just put on 2 new contracts
Mm-hmm.
with put debit spreads. Look at the cost on these. You're up 90, almost 1%. So you must have sold these at 30 and now they're at 3,
Mm-hmm.
right? Click on your -4 and let's see. Yep. So you sold those at almost 31.
Mm-hmm.
I don't know. Maybe leave them until Monday and then take those off and put on another 222.
Yeah. Yeah.
I don't know.
I think-
Because in a way you just rolled those.
Mm-hmm.
You rolled 2 of those. I mean, we're having a theoretical discussion.
Sure.
You opened a new position, but you also could look at it like 2 of these, you could close these and you rolled 2, if you will, and put on new put debit spreads with it.
Mm-hmm.
I don't know. Up to you.
Well,
I see
let's
that
go.
85 and 90 up there,
Mhm.
and I start thinking, man, it's got to be time soon to move these things. Now you're 85. I mean, that's marking at 4.
Abby,
mean,
do you
you
not
also-
care I'm in a session? Sorry about that, Ed. Well, let's see
Maybe
what the
leave
plan
these
says.
until Monday.
Let's see what the plan says. That's what I need to do. You know, make sure we. All right. Naked puts are usually. See, I gave me an out there. I said they're usually. I didn't say that they must. Naked puts are usually closed when 21 days are left in the trade, regardless of profitability. But I gave me another out, subject to overall portfolio metrics. A new put debit spread may also be entered with the new naked put in the same expiration. May. I give me a lot of outs there, so I can or cannot. But you know, I look though, and I go, all my metrics are good. Maybe I should split the baby. Right, these 2 are going to be at 21 days tomorrow. Maybe I close one of them now and roll it out, and we let the other one go for Monday. Kind of split the baby kind of thing.
You could even take 2 of these 4 off
Mhm.
and leave the other 2. I'm not. It's kind of look when I see these and they're at 90%.
Mhm.
I like to move them. You just moved them already, and I would typically move them with a new put debit spread. So I would do what you just did. I'd take two off and put two new whatever's on. It's, you know, 2 1 1 1s or whatever your preferred trade is. So that you did kind of, oh, you did all four? Okay,
I did all four of those. It's just,
that's
it's
fine
for
too.
my,
Let's look at your metrics now. Wait, let's go look at your metrics now.
okay.
Because you were at 41 something. Your deltas were 41, and I think they went to 46. Now they're going to drop way down. I bet they go into the 30s, maybe.
50 minus 10. So we're at 40 or so, 39.
And and then so your red delta warning is probably, what's this account value?
84 or so.
Oh, poof. Yeah. You got to be well back in the zone. Go back to your spreadsheet, please. Okay.
This is so fun, isn't it though? Look at us. So I
So that
closed at
only, that only
36.80s.
dropped your delta. Did that only drop your delta by one?
Didn't drop it by much, did it?
Oh, you know what? You went from 41 to 46 back to 40. So
Mhm.
all that action dropped your delta by one. So that's pretty cool. You put on two put debit spreads and rolled two nakeds and put on two fresh nakeds, and your delta went down.
Mhm.
You lowered your notional, you lowered your delta. I don't think you hurt your theta.
Hurt my theta a little bit, but I'm about to replace that. So we got out of this on 3, or no, today's 4, 6, 23. Oh man, it didn't make the whole thing green. I got to work on that thing. I want the whole thing to be green. There's some holes in the program. There. So that gave us, look at there, y'all. We made $543 on that. I mean, that's amazing, isn't it? So
But that looked like an ID 10T error, actually.
yeah, I think it is an ID 10T error. Yeah, I think that's true.
Quentin's got a question for you.
Oh yeah. Hey, Quentin.
Hey, Bobby. So one thing that I put in my plan
Mhm.
that I noticed during like the big volatility expansion
Mhm.
was that it's like that I put in my plan was manage the naked puts like one at a time each day up until 21 DTE. So it like you get some like price diversification and that you don't manage it all in 21 DTE when like things are going really bad, if that were to happen.
So what you're doing is like when it gets closed, you're just kind of layering them off like an onion, right? You're just peeling them.
Yeah, so let's say I have like 5 positions on. I'll do one at 25, one at 24, one at 23, one at 22, and then the last one at 21 days.
Oh, I like that. So that's
Yeah,
kind of
just
what I'm
like-
doing today, and I did yesterday, right? I'm kind of doing what you're doing because I rolled some off yesterday. Yeah.
Yeah, and I noticed that to be like it keeps your theta a little bit more stable and it keeps the P&L volatility lower.
Mhm.
And I noticed that like if things are going bad one day, you don't manage everything on one day. You have multiple days to manage, and that just keeps like overall volatility for like all your metrics lower as well.
Mhm. I love it.
Quentin,
With
Quentin, can I ask you a quick question? So
Yeah.
when you look to remove those at whatever days, are you hitting some percentage of profit on those nakeds? What's your trigger to look at that? Is it just the approach of 21 days? Like if you've got 5 on it at 26 days, you know you want to have them off by 21? Is that what your plan says, or what?
Yeah, so my plan says that it's 21 days no matter what. Usually the puts reach at least 80% by time 21 days rolls around, which is good for me. But even if it doesn't, I still want to remove that risk. And I try not to manage based on percentage of profit, because when you manage that, that usually means that the market's been going up a lot anyway. And then you're reallocating all that capital towards a naked put that would be of a higher strike. So it would be like more vulnerable to the next down move.
Agreed. And that's where you kind of have to space your trades going back in. You can't take off 4 and put 4 back on. You should maybe do 1 or 2 and wait a little bit and do,
Yeah,
you have,
exactly.
that's part of
Exactly.
the cost of doing business, you think? Okay, good.
Yeah.
And I
another
mentioned,
thing, yeah,
I
yeah.
only mentioned the percentage of profit thing because it's so easy to basically monitor. And I always say if at 21 days, our nakeds aren't worth harvesting, they're probably in need of rolling, and the put debit spread attached to it very well could be in the tent. So there's a lot going on when the NP at 21 days hasn't quite worked out yet.
Yeah, yeah, that's another thing. Because if you have a lot of positions on, it can get more complicated when it comes to 21 days. And having 21 days can be easier just as like, all right, it's 21 days. I'm just going to do everything. But so I have a smaller account. I noticed that just to keep things more flat across the board, it was easier to just roll it one day at a time. I agree that it's harder to keep track of, but I found it very useful when things like volatility expansion happen, which usually don't last very long as well. So that was something I kept track of. And another thing in terms of reallocating to that higher strike, another thing that I developed in my plan was like an entry plan for each position, assuming that all the Greeks are good. I like to put on for my account size, it's 2 trades a week based on desired yearly return as well as how much I expect to make per position. And that equates to 2 trades per week for me. And even if like the market's down big, I'm like, oh, like my buying power is barely high. I really want to put on a trade. It's helped me stay very like by the book and stuff like that with entering just 2 trades a week.
I like that a lot, Quentin. In fact, that's what I was talking about. You can't just fly. Well, you can fly right back in, but you are the only advantage of flying back in to a new position when removing a naked when the market's been ripping is you get a higher put debit spread. But as we all know, that's not nearly compensating for putting on a naked
Yeah, that's not what we want at the end of the
further
day.
up. And the scaling thing is, I do the same thing. I have a certain, like I just, part of my portfolios in SPY puts. And in the last 2 weeks, I've had, I think I had 13 on at one time. And now I'm down to like, I think I was down to 3 and I might be back up to 5. I don't know. It comes off in waves sometime. And I have done the put them all back on thing. And it usually doesn't work out because the other ones are all flying off because there was a market rally slash volatility drop. So I find myself having to sit on my hands. I can't just rush back into these things. I've got to space them out. Now, in addition to time, I want to just throw out there that, and I've said this in the room before, so I'm sorry if I'm repeating for some people, but in addition to time, which is like your 2 trades per week, period, I also allow myself the permission to do trades based on the market action. So if like today's the market more, or yesterday, the market was down 1% and I didn't, my second trade of the week. And today the market was down 2%. Because I'm putting those positions on at a completely different spot, different put debit spread, different naked put, and different volatility level, it kind of simulates waiting until next week to do that next trade. So I use time and percentage moves. I'll put on more than one position in a day. If I do one at 40 and we end up down 80 or something, I'm putting a second one on in that. So I just want to throw that out there. That may not be for everyone, but it is price diversification that you're getting by doing it over time. It's just the market's handing it to you in a quicker time frame. So
Yeah, and I think that's like super important with this strategy because at the end of the day, it's just like the same position just put on at different days, really. And so one thing I noticed when like before I developed my entry plan was that when you enter positions just based on the Greeks, like when your theta is low and your buying power is low, that's usually because the market's going up. And then if you keep putting on positions when all of those metrics are low, then one down move hits, you get really hurt, and then you can't put on a position during that time. So that's why I keep it like 2 trades per week. So it allows me to just stay more stable. Like really a lot of like options trading is lowering that P&L volatility and staying steady like with your process. And so that's why I try not to do much with price action and stuff like that, because I've noticed that can kind of get me hurt a little bit if I'm like over allocating on certain days and weeks and stuff like that.
Ladies
Okay,
and gentlemen, that is our future. That there. You see this? You see Quentin, an Alabama boy, University of Alabama, got him a job now, options trade. I mean, can you imagine his future? And it's great.
Thank you, Bobby.
Go ahead, Ed.
I wanted to hand it off
Something you said.
to the Angel. Yeah, go ahead, Angel.
Okay. I was just gonna say that I like the thought process there, Quentin. I think you've probably heard me talk about it in the past with the TND test when I rolled a bunch of stuff in one day. I saw that wasn't a favorable thing to do. So in my plan, I basically said that I'm allowed to open one position per day and close one position per day. And if I wake up and look at my metrics and it's like, oh, wow, those are way out of line, I should be able to open one position, close one position, and that should fix things for the day. On the off chance that it doesn't, and we're in some crazy flash crash, the world is ending kind of market, we're going to be delta hedging with futures and stuff anyways. So for 99.9% of days, opening and closing one position a day is kind of how I worded it in my plan, but I think you have the same thought process, not doing too much at one time. So I think it's really easy to close or roll all of your positions on a 5% up day. But what happens the next day when the market comes down 3%? Then we're kind of left going, oh, ouch. So just wanted to say I like what you're doing, and it's pretty similar to what's in my plan. So
Yeah, thank you. I think it's really important to, like, you don't need to put yourself on the dance floor if it's not necessary a lot of the time. And I think that's like a really key thing to realize, especially with this strategy, because it's so much about like time and price diversification rather than doing a bunch of things at once. That's not how like the best returns are going to come.
I'm just enjoying y'all's conversation. Y'all keep going. This is good. Really good.
I can put my like the formula that I use to come up with my entry plan as well in the chat later.
What do you mean formula? You got a formula?
Yeah, I don't have my plan in front of me because I'm on my phone. I'm about to go eat lunch at the house, but it's like I take into consideration the amount of like spot prices per year, which is 4, and then my desired return per position and my yearly desired return, and you do like little division, like little multiplication. It's like really simple formula, and that got me to like 2 trades per week, which has kept me under my buying power, and my desired yearly return is 24%. So it's not like something crazy like 50%, because then I'd have to allocate a lot more buying power. But the formula doesn't take into account buying power, but it does take into account just my desired return and the how often you can put on a trade and how much you would make per trade. And that's the 24% yearly return has kept me under my buying power most of the time, unless like the market's going down a lot. And so I'll throw that in the chat later for sure.
Awesome. Hey, Dan, show me where to do that. I've seen Ryan do that, and I don't know how to do it right off. Bobby, if you don't want to continue to scroll up and down on your macros tab, go to the drop-down filter list on the exit date and only have checked blanks. All right, so I'm on the exit date. Where do I find that?
Hey, Bobby, thanks. Right there in column or in cell R1, you see that little triangle white thing down there in the bottom right-hand corner?
Right here?
Hit that and then uncheck all the dates. Only check the blank, and it'll get rid of all that closed stuff. And then you can just scroll up down just through what you have open.
Look at that, y'all. Look at that. What the crap? What a time saver. Isn't that
Just
good?
scrolling up and down trying to find a single trade, and just saves a little bit of time is all.
Yeah, and that is awesome. Thank you. Look at that,
Yes, sir.
y'all. Did everybody see that? You do it right there. It just shows me my open trades now. That is sweet. Wow. That's a time saver. So y'all, what I ended up doing is I rolled the 4 out. I was only going to do 3, but I wanted my theta to be a little more, so I did 4. I rolled the whole 4 out. And now my new Greeks and ratios, I moved that all the way up. Remember, we were at a 0.05. So with everything that we did today, we moved it from 0.05 to 0.09. I don't think there's any need to go any higher than that now. So we bumped that up to 76. Our deltas are 64. Now we're at 33% buying power. I mean, it looks great. It looks really good. So let's go to our final account. This is good stuff. Good, good, good. All right, so let's go to the final one. See how we're doing. Let's see. This is Crimson. And Crimson is 35053. 35053. Oh, yeah, baby. 35053. Fire up the pen, Roger.
Well, we're moving on now. Moving on up to the side. To a deluxe apartment in the sky.
So the market's up 6.44%. We're up 2.51%. But we know that we're coming back. We were up 9%, y'all. We were up 9%. And I'll tell you, can I go ahead and confess, I did not handle the high volatility well at all. I should have really, now it's hindsight's 50-50, according to Pat Dye, former coach of Auburn Tigers. Hindsight is 50-50. If I had known that it would immediately come down, I would have done nothing. I puked some positions and I shouldn't have puked them. I shouldn't have puked positions. I made a mistake. But in hindsight, I got my metrics in line and we're coming back. I think we'll overtake the market again very, very soon. So we are on our way back with 2.51%. And let's see what we need to do over here. Our Greeks and ratios are, we are at 29. So 30 minus 2 is 28.37. 28.37. Look how it just eats the theta, y'all. Oh, it just eats it. Look at this. Oh, but I'm still good. And our buying power over here is at 10,707. Yep, 10,707. Beautiful. So we're at 30%, just like we should be. Our theta's here. That's good. Now, in this instance, I don't need to put on a trade. I don't need to do anything unless I was rolling something. So let's go check it out. See our nakeds. Show groups. And let me put my T-bills in my T-bill group. So, nakeds. Look at that, y'all. You think Ed would scream if I didn't roll this one? That's at 91% at 21 days. Look at this. I got a bunch of them, y'all. I got a bunch of them. So I think what I'll do is I'll roll one, roll these out, and then we'll do, I'll do like Quentin does probably and just kind of, take these off a little at a time.
And I also want to point, as you take these off, you're leaving a wake of a campaign of put debit spreads behind.
Yeah.
You can take these off and put on fresh nakeds and just use your existing put debit spread as the protection. But what you just did earlier is you took off your nakeds and you put on new 1-2-1-1-1s, but you took off 4. So you left some put debit spreads, quote, unattached by our old methodology, which will increase your put debit spread to naked put ratio.
Yeah.
Quentin's got his hand up again.
Hey, Quentin.
Oh, I didn't mean to have my hand up. I apologize.
I just love this little filter function. Look at this, y'all. So now I can go find my 3660s that is that what to close? 3660s? I think so. We'll close 3660s. 2 3660s at 260. 3660. There it is at 260. And we got out of this one on 4/6/23. Look at that. Look at that, y'all. Now, I need to ask y'all a question about a formula. So it may get a little technical here, but I need to ask y'all's opinion on something. So I'm going to go out now. So 3660s, if we were to go to the 71 days, where is the current 3660? Let's see if we want to roll the same strike or we just want to do some 3660. 3660 is 2625, a 12 delta. That sounds good to me. Look at this roll, it's the same one. Do two of those. And we'll try 2650. Nothing. Jack, squat, crap, nothing. 3660s for 2625. 2625.
And Bobby, the delta you're choosing, just for the listening, viewing audience, the deltas you're choosing are probably in your plan and are somewhat subjective.
Yeah, I think it's somewhat subjective.
Yeah, so, and I'm not knocking it at all, but you're doing these higher 12 delta things like that, in which it's a little high.
A little aggressive, yeah.
So I just, people are just tuning in and, there may be some Bobby click the button, I'm going to click the button people. And I just want to kind of let them know that those deltas are a little high.
Yes, a little aggressive,
And yeah, I just want to throw that out there.
Yeah, a great point, Ed. And so what we need to figure out is this, okay? This is why I need y'all's opinion on. So I have over here naked positions. Okay, that just means it may be a 111 or 112, and it's not counting the number of contracts. Okay, so I have on 14 naked positions. Then I'm counting the actual contracts of put debit spreads as 12. And I don't know what's right, because if I'm doing 111s and 112s, what does this need to be? The number of naked positions and the number of put debit spread positions, regardless of contracts. That's what I need to figure out. And right now, this is the number of naked positions, regardless of number of contracts. So let's go back over to the trade tab and just show you. So naked positions. So there's 1, 2, 3. See, regardless, they're all one tranche. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, right? It's not counting the number of contracts. Now, the debit spread calculator is calculating the number of contracts. So I kind of like having the same amount of put debit spreads, regardless if it's a 111 or 112. Do y'all see what I'm saying? It's hard to explain. I think I'm going to stop the recording and then we'll talk about this. But this is good stuff. All right, great session today. We'll kind of go into an after school to talk about this. So I will see y'all Monday. I said I will see y'all Monday. Monday. Oh, yeah, but we're not doing March. Good Friday tomorrow, Beth.